Consumer stocks are in free fall, plummeting 2.81% this week, with a deeply oversold RSI of 32 and a bearish trend. Inflation risks are escalating. This is what every serious investor needs to know about consumer right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we are navigating a market environment characterized by elevated uncertainty, as reflected in the VIX index, which is currently sitting at 26.8. In this context, the consumer sector is an area that deserves our attention, given its significant weight in the S&P 500. Looking at the sector's performance this week, we can see that the consumer sector is tracking closely with the broader market, but the sector ETF, XLY, is down by 2.81%. This underperformance is noteworthy, and it warrants a closer examination of the underlying trends and themes driving the sector. As we delve into the consumer sector, we will be discussing the key factors influencing its performance, including consumer spending patterns, inflation, and the impact of monetary policy. Given the current market regime, it is essential to assess the sector's risk profile and identify potential opportunities for strategic positioning. Let us start with the technical picture and what the charts are telling us. The consumer sector, as represented by the ETF XLY, has been under significant pressure, with a weekly decline of 2.81% and a monthly drop of 6.3%, indicating a notable loss of momentum. The RSI reading of 32 is particularly noteworthy, as it suggests the sector is in oversold territory, which could imply a potential reversal or consolidation in the near term. This bearish signal, however, also indicates that the downward trend direction and conviction remain intact, with the sector likely to face significant resistance in any attempt to rebound. Key support levels are likely to be tested, and a failure to hold these levels could lead to further declines. Conversely, if a breakout above current resistance levels occurs, it could signal a sustainable reversal, but given the current momentum, this seems less likely. The technical setup worth watching this week is whether the sector can stage a meaningful consolidation, potentially setting the stage for a rebound, or if the downward trend will continue, leading to an extended overreach. Now let us look at the fundamental catalysts driving this sector. The consumer sector is poised for a pivotal week, with macroeconomic tailwinds and headwinds vying for influence. On one hand, a strong labor market, as indicated by the upcoming non-farm payrolls report, could bolster consumer spending, a key driver of sector growth. On the other hand, the PCE inflation data release may shed light on the trajectory of prices, potentially impacting consumer behavior. Key stocks such as AMZN, TSLA, MCD, and Nike are signaling a mixed bag, with some indicating resilience in discretionary spending, while others suggest a more cautious approach. Earnings reports from select retailers will provide further insight into sector health. Regulatory news, particularly around autos and luxury goods, may also move the sector. The longer-term fundamental thesis for the consumer sector remains intact, driven by the ongoing shift to online retail, and the consumer sector is facing significant risks this week, primarily driven by concerns over inflation, supply chain disruptions, and shifting consumer behavior. With the VIX at 26.8, investors need to be cautious with position sizing, as the current volatility environment can amplify losses. Unexpected headwinds, such as changes in government policies or geopolitical events, can further exacerbate market fluctuations. To manage downside exposure, investors should adopt a disciplined framework, focusing on diversification, hedging, and regular portfolio rebalancing. This approach can help mitigate potential losses and ensure that investments remain aligned with overall risk tolerance. By carefully assessing these factors, investors can navigate the challenging landscape and make informed decisions. And now for the strategic outlook, where does consumer stand heading into next week? Our strategic positioning for the consumer sector this week is cautiously bullish, given improving consumer spending trends, with a key theme being the resurgence of discretionary spending, which rose by 4% over the past quarter. This is educational content, not financial advice. For more insights, subscribe to Financial Market Oracle, and comment your consumer watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results. subscribe to Financial Market Oracle, and comment your consumer watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.